Joining you from the CII headquarters in New Delhi, and I've got two architects of Interim Budget 2019, the Finance Secretary and the Secretary of DIPAM, and of course our in-house expert, our consulting editor Maitri Bustam are with us to help us decode the interim budget. Mr. Finance Secretary, I'll begin with you. One of your critics, the former Finance Minister P. Chidambaram, says this is not a vote on account but an account for votes. It's an interim budget which has addressed every constituency from farmers to the middle class to even housewives with that TDS announcement that has been made. I'll begin though with the big agri scheme which was very largely expected, 6,000 rupees a year direct benefit transfer, which the opposition is already calling too little. What is 6,000 rupees? What do you have to say to that?
Well, 6,000 rupees in present context is not too little. It is a fairly large sum of money which is going into the accounts of the farmers. We have few examples of this type of direct transfers which have been done by states, and one of course is a little more.
So it is
the other is less than this. So it's a number which has been arrived with great care. They have calculated that roughly 500 rupees per month would be the type of flow which can take place, but this can be consolidated on a 4-month basis. Three
times a year. With a retrospective effect.
With a retrospective effect from 1st December.
It is an election budget after all.
Well, that's for you to interpret. For us, it's an interim budget for 19-20 and a revised estimate for 18-19, under which the scheme will start.
But what is the logic of linking it to land holding rather than addressing it to those who have no land at all, who are the genuinely distressed in the country?
Well, this is a category which is fairly large, the small and marginal farmers, and if you have read the budget speech, it talks about addressing the distress of the farmer because of certain market forces which are there, because of bumper crops with falling prices and the type of distress which has been caused. The other categories of people are already being taken care of under different schemes of the government. We have Manrega, we have social sector schemes, we have a whole lot of other schemes which takes care of that. But this is to address the particular woes of the farming community because of the adverse circumstances that prevailed
but
in the
figuring
last
out land holdings, isn't that going to be difficult? The land titles is a big issue. I know you're moving towards digitization, but you're
long way to go.
The numbers which we have from the agriculture census is that there are about 12 crore small and marginal farmers. Or farms which are classified as small and marginal holdings. Number of states you have digitized records, and you have a fairly robust and elaborate mechanism of maintaining land records. Large number of states are not at the same level as many others, so that's a challenge. But then land records are also very meticulously maintained. Otherwise, even if they are not digitized, they are very meticulously maintained. So we should also trust the machinery which has been there for centuries. And
no, they're very meticulously maintained, but they're not correct.
And also contested very.
That of course I will not take it without contesting myself. But I'm sure that's not a debate we should enter into at this stage.
75,000 crore rupees is what it's going to cost, and that means you made his life a little more difficult. He has to get 90,000 crore rupees. That is a new target that has been set up. So the market.
No, anyway, please, sorry.
The target is quite. It's a tall target. You're going to have to raise that at a time when the markets are certainly very volatile. There has been a certain amount of criticism in the stock markets when it comes to the performance of the PSU stocks. The kind of returns that the capital markets had gotten used to is no longer the case. If I could just put it very bluntly, what's the POA?
Well, you have asked many questions in your statement. I'll just answer one, that is regarding the number which has been mentioned. If you see in last 3 years, consistently the targets are being met, if you will call it a target. However, today the listed stock capitalization of PSU is roughly 14 lakh crores, and government amount is roughly about 9 lakh crores. 8,68,000 crores. And the capitalization rises further, as you just mentioned, that they are actually at a lower end. It rises further. So the actual objective is, core objective, if you ask me, is to unlock that value. And once the value gets unlocked, government as an investor takes some of the money out. As we called in the debt side that we were crowding out the investment by borrowing more. Here we move out, allow a lot of investment to come in, where the investment feels very safe, because in a sense the companies are known, they have a balance sheet. It's not a off the block some startup or some little company about which very little is known. Therefore, it brings in a lot of investment. At the same time, while we take the money out of it, that goes into as a capital receipt into the budget and meets those requirements. And I would hasten to add that, considering the fact that we have now a lot of instruments available and we are adding also asset monetization next year, which is presently a work in progress. Frankly, the number 90,000 is not out of the realm. Sometimes you have to be innovative, because here, unlike, there is no cookie cutter to say. There are instruments, but every time you have to be innovative. Look at how best you can unlock the value or go down the supply chain, improve the competition between companies, and so on and so forth. And to that extent, each transaction becomes a new transaction, a new innovation. However, this number, as we see, is a byproduct of this entire exercise.
Innovative, like your mergers and acquisitions of existing PSUs, share buybacks, higher dividends.
Very important. Very important.
Increasingly, disinvestment, you're looking at it, government is looking at it really as a means of raising some funds, rather than the spirit of disinvestment, which is moving out of government.
You're selling public silver.
Let me take it up. In fact, what happens, we get a bit ideological when we say we have to move out. Strategic disinvestment is one of the pillars and very important. 24 companies are there on strategic disinvestment, and we are carrying on with that.
When will we see that happen?
Already one has been done. About 5 are in a shape they could happen between 1 month to 5 months.
In this fiscal?
Could happen in this. See, unfortunately, we don't look at strategic disinvestment in a fiscal term. Okay. It could happen this year, it could happen early next year as well, in the, the fiscal things. So I'm not too bothered about the sort of proceeds from them. As I mentioned, I don't even count those proceeds. Very important that they get disinvested.
Smaller ones like Pavan Hans and all? Or?
Could be big. Air India was big, but could be small as well. Okay. But however, each one of them is equally important. But important thing in case of the other companies is that you do it because they are in unhealthy competition, or everything is very similar about them. Over a period of time, they were perhaps born with different objectives. Today, there is whole lot of congruity about their working patterns and objectives and so on and so forth. Therefore, it becomes many times imperative that either for sake of reducing risk, as happened in case of ONGC, HPCL, or as is happening in case of PFC, REC, that their separate existence and fighting with each other doesn't make any sense. And the market gives it a thumbs up. After CCA took a decision to sell its shares, the prices of these two scrips rose by about, on an average, about 20%, when Nifty rose by about 2%, Nifty Finance rose about 4%. So let the market decide.
No, one question I think which every DIPAM secretary gets asked is, what is holding back disinvestment in Suti? That is ready cash for the government, which is struggling against a disinvestment target, and this is ready money.
As I said, perhaps there's a contradiction when you say that you're struggling against disinvestment target. Disinvestment target is essentially a byproduct. The number which comes in a byproduct gets added onto the budget as a capital receipt. So capital receipts are not revenue receipts which have a, as I mentioned before, as a cookie cutter, is a flow, it's a tax. It's not a tax. Neither is a royalty. Each one is born out of a particular transaction which has a particular objective. Suti shares had a different objective when Suti was set up, and now their shares play a very important part in many of our transactions and many of our instruments. ETF, for example, have Suti shares to backstop them. And it's not that we are not getting out of them. In fact, one of the Suti shares, we are almost out of it. Very important Suti share. And others also.
LNG.
I don't want to take names because they are price sensitive, but
Axis,
we are.
ITC.
So, no, I don't want to say that which one we are at the tail end. If you see our holding in L&T, it is minuscule, is already. So, but however, it's all part of a strategy. It's not a part to meet a requirement that suddenly a lot of money is needed and we want to put in there as this. Disinvestment as a target, as a policy, had been to unlock value, give people greater participation in all these scripts, and also bring new investments and new scripts. For example, PSUs would never have been part of an ETF and passive investment and bring a lot of foreign money in had that kind of instrument not been created, and it has brought more than 1 million retail investors into it. So that is if you see the broader goal, and strategic disinvestment also falls in that kind of which is a major vertical, and now asset monetization.
What was the message that was given out when you had to do the budget in an election year, where a lot of the schemes had to be for all stakeholders, like I said, whether, even Gau Rakshaks, for example, have been covered, or housewives, farmers, the middle class, etc. You had to obviously stay fiscally prudent, which has been the big message for the last 5 years. So what was the big message which was given, and if you could explain a little bit about how, if you take out the minimum support scheme, you would have reached 3.1%?
Exactly. In the revised estimates for 18-19, our target was 3.3. 20,000 gets added. Our GDP numbers are around almost 1,90,000 crores, so 19,000. So exactly 0.1% gets added to my fiscal deficit because of this additionality of 20,000 crores. Likewise, in financial year 19-20, my target was 3.1. We had a number below 3.1, reasonably below 3.1. But when I add 75,000, which works out to on a GDP of 2,10,000, which we have reckoned, it's about 3.3% more. So you come to around.
Assuming crude at 60 and.
No, crude is priced at a little higher.
Okay.
Than 60, because 60 is the current price, but
you've taken that into account.
We have taken that into account. In fact, we budget at a slightly we average out for a year and then take those numbers into account. So all those have been taken into account. Food subsidy is
What is the extent of the rollover of food subsidies, petroleum, fertilizer subsidies? There typically is a rollover because government's accounting is on a cash basis. So what would the rollover be of all the subsidies put together?
Well, as far as food subsidy is concerned, we have a fairly large budget this year, which is of almost 1,71,000 crores. Next year it is 1,84,000 crores. So we do not expect a rollover
on food. What about fertilizer?
Food. Fertilizer, we have a budget of 70,000 crores. Next year we have a budget of 75,000 crores. We had some past liabilities which we carried over to this year. So typically in fertilizer, bills take time to get settled, and they may get settled perhaps, as you rightly said, they are on cash basis, so they might get settled in next year. But on year-to-year basis, the carryover is not that significant.
I was just smiling if you saw me, because my two colleagues, Parisha Tyagi and Ashna Mishra, who were there, were smiling because they had done a budget story on how the food subsidy bill would be 1,70,000, and they were very, very excited. So I just wanted to gloat a little bit about those two young reporters.
Okay, and as also as the quality of the fiscal adjustment is concerned, it is, if you look at the next year's, the effective revenue deficit is higher. That means there is going to be a worsening of the quality of the fiscal deficit. And also if you look at the debt to GDP ratio, there's a marked worsening of debt to GDP ratio from 16-17 to 18-19. So what explains that? If the government is being fiscally prudent, then that should not have happened. The slippage in debt to GDP ratio, the slippage in the effective revenue deficit, these are all marks of a worsening of the quality of the fiscal deficit.
Well, I don't exactly recall the numbers just now, but as far as my recollection is concerned, this year both from BE to RE the revenue deficit has been the same. It's 2.2.
Yeah, right.
Next year it is 2.3.
No, next year also 2.2, but effective revenue deficit goes up from 1.1 to 1.3.
3, yeah, that is because of a very large revenue component which is coming, revenue expenditure which is coming by way of the farmer package of 75,000.
And the income tax ops. Farmer package is 20,000, this is 18,500. So both together, no?
Both together.
Because government always, you explained the slippage by the farm's support, but not by the income tax giveaways.
Yeah. Correct.
So both have contributed, no?
They have contributed to a slippage of 0.2. Right. So considering that my fiscal slippage has been 0.3, I do not see that this is really a very major issue as far as the government budget is concerned.
And as far as the non-tax revenues are concerned, how much are you expecting from the Reserve Bank of India, from banks? Because banks are not in a very good position. So their dividend clearly will not be very much. And we still have the Jalan committee looking into the RBI's capital framework. So how much are we expecting from the RBI? Are we expecting a very handsome interim dividend?
Well, this issue is going to be taken up in the board meeting of RBI as and when it's held.
So how much have you budgeted, sir?
Coming. Well, we had received 40,000 crores this year, and next year's number exactly I do not remember, but
68 or something.
Yeah, we must have budgeted on a normal growth and some expectation of additionality.
Have you budgeted spectrum auctions? Because I remember that was done, and given the market realities, is that been budgeted for this time?
Okay. No. I don't recall because I don't handle non-tax revenue, so I will not be able to answer your question.
The budget this year seems to be kind of giving a push to consumption at a time actually when the need is for investment, because if we look at consumption, most of the corporates say that they are operating at near full capacity, as in 75 to 80%, which is full capacity. So are we going the wrong track by giving a push to consumption at a time when capacity utilization almost reached the maximum and the need is for investment?
Well, I think as far as investment is concerned, I do not see where the government has held back this year compared to any previous year immediately preceding. The investment targets are fairly robust, I would say. The direct capital investment of the government, both in roads and railways, are fairly significant. Almost 20% increase in both of them, in the railway capital expenditure budget as well as in the road sector budget. We have stepped up investment even in Prime Minister's Gram Sadak Yojana to cover the habitations now. Now that the villages have been connected, now the habitations are being covered. Apart from this, we expect the public sector also to raise a significant amount through their own internal resources as well as from the borrowings. Last year we had expectations of investment of almost 5,90,000 crores. This year the expectation of public investment through internal and extra budgetary resources is expected to go up beyond 6 lakh crores. So I do not see how the government is holding back on investment. In fact, the core infrastructure investment directly by the government has actually increased this year.
No, government has been spending, but they have been borrowing and spending for capital investment. Because we look at the borrowing, gross borrowing is going up by 2 lakh crores. In the process, the private sector does get crowded out, which is why I think large corporates are a little unhappy, because real interest rates are quite high, and with so much of borrowing by government, additional borrowing, that pushes up interest rates even further. So does it dampen private corporate investment?
Well, because private corporate investment was slow, government was investing in a very aggressive way, and recalibration will come about.
So if I could bring you in, and I'm going to ask a question on behalf of the markets, if that's okay with you. Typically, investors stay away when there is uncertainty. There is obviously uncertainty looking at the global arena, plus you're going to have elections in 2019. given that you still have a target, you're saying the 90,000 crore rupees is a reasonable target, but also at a time when there has been some negative commentary that's been coming in for the PSU stocks. For example, look at the drubbing that you've seen in the oil and gas pack because of that 1 rupee loss. For whatever reason, the market decided to read it very negatively. So given these kind of challenges, how do you plan to go about it? Are you going to look at new products, or is it going to be pretty much what we've seen so far?
Look at the recent history. Coal India OFS came at a time when nobody was willing to touch the market, and it raised more than 5,000 crores, which was the largest raising.
And a lot of the investors are today weeping.
Weeping, they're crying.
Well,
they're writing very actively to you as well.
These are the people who are in a very short-term speculative mode. Those who have stayed with this stock in particular, and I don't want to dwell too long on that, have gained and have invested and reinvested, and I know in this OFS they did so. Thereafter, it was an ETF when people said that foreign money, FII money is not flowing in.
Yeah.
And more than 50% of the offering came from the FII funds, which was 30,000 crore subscription against 17,000 crore. My own belief is, your instrument should be able to create a hawa in the market rather than waiting for the hawa. Chota mota stock goes with the hawa. Such offerings do create a position in the market because it shows that government reposes confidence in the market, and it is very important to send those signals, and trust me, they bear fruit. I have cases, and there are many such cases. And it's also important, you raise the issue of crowding out of investment. Actually, when we move out of these PSUs, we are helping the investment to flow in by ourselves stacking out of it. And also, this replaces, for the government needs to spend money for the right reasons, a debt which would otherwise would have come in and crowded out your public sector, your private sector requirement, and brings in a very much required capital receipt to balance out the debt which we normally borrow to create a capital asset. Improves what they call productivity of capital, and brings in your GDP growth much faster because the interest overhang then moves out of the system. And these are the kind of things which really, and you also raise this issue of quality. It is a bit linked with it, so I thought I'll just add a further point to what Finance Secretary has mentioned, is that many a times we feel that it's a revenue expenditure, but its contribution ultimately leads to a capital creation. Piketty and others have been talking about a beautiful paper.
That's why we remove that plan, non-plan.
So a government is, in any case, sort of dedicated, or I will say required to meet the inequality issues also, and here they do come through a revenue requirement or revenue route of direct benefit transfer rather than a Keynesian route which was gadda khodo and gadda bharo. So, but then he gets to move his investment into far more productive one, because everybody thinks through for their capital investment. So he creates an asset which reduces inequality in a longer term. So in a larger economic thesis, in fact, it's a very good fiscal step in that sense. The deficit, the quality of deficit is improving. So you do look at the revenue thing, and the entire thing does build.
They always work a little harder to convince us. But sir, I wanted to ask you one question. If you look at the financing of the deficit from the CJA numbers for November, there's a heavy reliance on NSSF, National Small Savings Fund, which was not there last year. There's a heavy drawdown on cash balances also. Now, NSSF is much more expensive than any other kind of borrowing. So does this mean that the government is creating the situation for the next year? The quality or the fiscal base that you have is worsening?
See, NSSF, I mean, you must be fairly well versed with the way it operates.
Not like you, of course.
But NSSF is a receipt for the government.
Sure.
In the sense it comes into our account. It comes as an expensive receipt, but it serves a certain class of investors who are very dispersed, who don't have access to stock markets or other instruments of investment. So that becomes like a fixed receipt for the government.
Sure.
And in any case, I have to pay interest on that receipt which I get from the investors. And unless until I don't use it prudently, I am just paying receipt out of my current account. So it's a balancing which we do of, and earlier in the era prior to the 14th Finance Commission report, it used to be given to the states. Now the states have an option to take from NSSF, and because of declining interest rates and bond market, the interest rates have come down quite sharply. The states are not picking up NSSF money anymore. You have very little demand for NSSF money from the...
That is the irony of it.
For the center, it becomes like a receipt which we have to hold whichever way it is. So we use part of it to finance our fiscal deficit, and part of it also is used to lend to other borrowers who want, like we have National Highways Authority which takes money from us. We have certain power sector corporations which come and take money from us. It helps us to finance part of our Prime Minister's Awas Yojana also. So, I mean, it's used productively in different spheres, but it's a borrowing by those organizations. It's not a budgetary borrowing.
I mean, that is the advantage of it. It's not a budgetary borrowing, but it's still a borrowing. So this is a fine haircutting which governments do.
Because it's part of my public account and it's coming into that.
Absolutely. One last question, Secy. We have time for one more question?
Yes, we are getting...
tax-free bonds used to be resorted to very often, and middle-class people really look forward to tax-free bonds, particularly for funding infrastructure. Why has that been given up by this government? Last year also we didn't see any tax-free bonds.
I think there has been a concern expressed that tax-free bonds should not be used, and we have not tried it for the last 2 years. I don't know if my colleague has come here, Mr. Garg,
unfortunately we didn't ask him.
Secretary Economic Affairs. He would have been able to answer it fully, but we found that it's been found that it doesn't really serve the purpose it was meant to. There are other tax-saving instruments which people can use.
If I could just ask you, this entire liquidity crisis that we've seen, NBFCs, the rollover that has taken place, a lot of people believe that perhaps the Central Exchequer, the Centre and the RBI are just postponing the problem. What would you say to them who believe that this entire problem is being postponed and not being dealt with today?
I think they are being adequately addressed in the fora where they are supposed to be addressed. The RBI is also aware of it. The government has been aware of it. There are discussions going on. The governor has been meeting various stakeholders in the entire way the
because you've already started seeing that having an impact on the economy. Look at the auto sales, for example.
So I'm sure that they will come out with a package. I'm quite sure, because the governor has been meeting all of them.
If I ask you a slightly incorrect quote-unquote question, do you find a more receptive ear now that you have a former burecrat in the Reserve?
Your colleague, your ex-colleague actually.
Is it a more receptive ear?
It is for you people to judge.
I'm not saying whether you do what you want him to, but do you at least get a more receptive ear?
It's for you to judge that.
Okay, with that,
Nora, it's not appropriate for me to comment.
With that, we are running out of time, and I'm being told by my producers, but I'd like to thank both of you,
so
two budget architects, for joining us here on ET Now to decode interim budget 2019.